Okay, so good morning, everybody, and welcome. Thank you for being here today and joining us for the Quarter 4 local and economic update. Today's session will focus on the Quarter 4 quarterly economic survey that is ran through British Chambers of Commerce and, of course, ran through the local chamber. So for yourselves today, it'll be through South Cheshire Chamber and supported by Greater Manchester Chamber of Commerce. The QES is the UK's largest independent business survey and provides one of the earliest and most reliable indicators of economic performance, shaped directly by the responses of business across the country and, of course, this region. So the more responses that we get from yourselves on this call today and hopefully further out, the more accurate data that we can then report on following on for the next quarter. I'm very pleased to welcome Subrah, the Director of Business Policy and Research from Greater Manchester Chamber of Commerce, who'll be sharing the latest findings from the Quarter 4 QES and what this means for the current state of the economy in South Cheshire and the wider region. Just before we begin, or before I pass on to Subrah, this session is recorded, so we will put this onto our South Cheshire Chamber YouTube in this coming week. If you do have any questions or anything that you want to put into the chat, please do put this into the chat feature at the bottom or into the Q&A. You can find the Q&A, for me at least, on the more bottom at the bottom. And then there's the Q&A button in there as well. We will pick up all of these questions at the end of the call. But if there's anything very prevalent to get going through, please put that through and I'll pick that up. That is it from me. Thank you all for being here once again, and I'll pass on to Subrah to begin the presentation. So thank you, and on to Subrah.
Good morning, everyone. Thank you, Don. It's good to be back doing this presentation. And as always, what I am presenting are the results of the Chambers of Commerce the Network's quarterly economic survey. For those of you who may be attending a similar presentation for the very first time, the South Cheshire Chamber QES and the Northwest QES, which is what I'm going to primarily focus on this morning, are both part of the UK's largest and most reliable business confidence survey. Now, this is a survey that was first run in the late 1980s. And since then, in every quarter, we have run the survey with pretty much the same questions. And that means we have a lot of historic data that we can rely on. That data is actually extremely valuable and useful. It is used by policymakers such as Treasury, Bank of England, and the OECD for decision making. Now, the reason I'm sort of presenting this is because Greater Manchester Chamber coordinates the Northwest QES. So what we do is to administer the QES for our region, Greater Manchester, but then we coordinate with the other chambers, the likes of DOM and our colleagues in other chambers in the Northwest to help them with their survey. And I prepare the Northwest results, which then goes to the BCC, who prepare the national results. And in addition to my role at Greater Manchester Chamber, I'm also a research advisor with the British Chambers of Commerce. Right. So firstly, this is the broad economic context. Now, there is a noticeable quarterly slowdown, and it has happened in 2 quarters towards the second half of 2025. But it is also important to remember that we are not facing a cliff edge. There has been mention of a recession. We are nowhere near a recession, and I don't think a recession is likely at all. And that's the important point that I want to make at the very beginning itself. The results do show a mixed picture. There are some good spots, bright spots in the economy. There are also some areas where there is a weakness in the economy. But overall, what we have is slow growth, low levels of growth, and that seems to be sort of sustained over a long period of time. I mentioned bright spots and not so bright spots. One of the not so bright spots was retail sales. We get data on a monthly basis from the Office for National Statistics on retail sales. And what we have now is access to the November data. We don't have the data for December yet, but the November data did show a weakening, and that is despite Black Friday discounting. Now, you might remember last year in 2024, rather, many shops resulted to sort of a Black Friday sales over the month of November, and that did not have much of an impact. So this time it was a more compressed time period for Black Friday discounting, but even that did not see a huge uptake of goods. And that's one of the issues that is bothering the economy. It could be because of low levels of consumer confidence. We are facing tax rises from the budget. And as a result, more people might want to hang on to a little bit more of their money rather than spend it. One of the bright spots in the economy is automobile manufacturing, and that does have an impact on the Northwest because we do have a bit of that here, primarily in Merseyside, but then we also have component manufacturers spread across the Northwest. Automobile manufacturing in the UK was significantly impacted, disrupted because of the cyber attacks on Jaguar Land Rover. And the graph is actually very telling. So we have steady levels of automobile production, and then production just went south, over a cliff edge when Jaguar Land Rover shut down operations after the cyber attack that they faced earlier in 2025. Now, there seems to be a strong rebound in automobile manufacturing. Jaguar Land Rover back to normal, more or less. And that has actually contributed to manufacturing sector growth in the month of November, which in turn contributed to UK economic growth. So in the month of October, GDP actually fell by 0.1% in real terms. But what happened in November, the subsequent month, was a 0.3% increase. And that was primarily the result of that rebound in manufacturing, which in turn was helped by automobile manufacturing, but not exclusively by automobile manufacturing. So we have had periods of slight reductions in GDP, 0.1% decline in September, followed by a 0.1% decline in October, and then an increase of 0.3% in November. So let's take that for good news, for what it is worth. Now, nationally, as I said before, consumer confidence and business confidence both remain slightly low, and the autumn budget has definitely dampened optimism. Now, the situation of different sectors is mixed, but overall, what we have seen is a slight improvement in the PMI indices. So this is the Standard & Poor Purchase Managers Indices. All three sectors are showing a slight improvement between November and December. Services went up marginally, probably within the margin of error, from 51.3 to 51.4. Manufacturing actually rebounded from 48 to 50.6. That rebound in manufacturing is also visible in the QES data. And construction also went up slightly from 39.4 to 40.1. Now, just for us to be able to interpret these numbers, do remember for the purchase managers indices, the threshold is 50. Anything above 50 indicates growth, and anything below 50 indicates a reduction relative to 12 months ago and so on. So when we have a slight improvement in services, the good news, of course, is that both of those numbers for those 2 months of November and December are actually above 50. Manufacturing has passed that 50 threshold in the month of December, but construction is weak. Now, overall, nationally, the construction sector seems to be struggling a little bit. There was a promised pipeline of public sector projects that does not seem to have necessarily materialized. And so the construction sector seems to be weakening also on the back of a reduction in house building. Now, that also means that some of the targets that national government have set for house building are probably not going to materialize immediately. We have a target to build close to 300,000 houses across the UK per year. That is probably not going to materialize during the term of this parliament. The national data shows that we built about 180,000 houses on average. So we are building 60% of target. So there is clearly room for expansion, but because of the macroeconomic climate, and other factors which are affecting the construction sector itself, things like the high cost of materials, wage inflation, lack of skills, etc., those factors are all affecting the construction sector at the moment. So let's turn to some specific QES data. So first up is domestic demand. There are two measures in the QES for domestic demand. One is sales. So the chart on the left tracks domestic demand by way of sales in the quarter, and the chart on the right tracks advance orders. Now, the interesting thing here is about the manufacturing sector. So overall, the manufacturing sector has improved since the beginning of Q1 2025. That's the green line there. But what we see is a quarterly weakening. So while in some areas of the UK and in some areas of the Northwest, manufacturing output has picked up, it's true for the wider Cheshire region. It's also true for Greater Manchester. Across the Northwest, manufacturing does seem to be struggling a little bit, right? For the QES, the magic number is 0. So the threshold is 0. So anything below 0 indicates a weakening, and anything above 0 indicates growth. So we have the manufacturing sector actually below 0 in the latest quarter. We also have construction below 0 for the latest quarter. And where there is good news is in the services sector. So the services sector, which is the orange line in both of those charts, has shown an improvement between Q3 2025 and Q4 2025. When it comes to domestic orders, it's a similar picture, weakening in the quarter for both manufacturing and construction, but a slight improvement in services. Again, services advance orders have actually gone past that 0 line into positive territory. So that's also good news for the services sector. Now, services sector is actually quite important. 80 to 83% of different parts of the economy is actually made up of services. Across the UK, it's about 82%. In Greater Manchester, it's 84%. In Cheshire, it's again about 83, 84%. So services sector doing well is actually good news for the overall economy, because there will be economic growth when the service sector booms. Right. We'll look into some other data for the service sector as well later. So that was domestic demand. Now let's look at exports and overseas demand. Now, international trade has been very much in the news. We have had a challenging 2025 because of tariffs from the Trump administration, a long-term weakening in international trade performance in the UK because of the remnant effects of COVID and Brexit. But overall trade has picked up when we look at the values. But actually, there is a mixed picture when it comes to the sectoral performance. What we see in the UK, and this is also shown in the Northwest, is an improvement in service sector exports. That's the orange line there. And what you can see is that between Q3 2025 and Q4 2025, both export sales in the quarter and advance orders from overseas customers have gone up. So the orange line shows an improvement between Q3 and Q4 2025. And in the case of export orders, the line has actually gone above the 0 mark into positive territory. So we are close to +7 now for export orders. That's good. But when it comes to goods exports, actually there are significant challenges. So the green line there has actually declined between Q3 2025 for both export sales and export orders. Now that's manufacturing exports, that's the physical goods. And many businesses still tell us that they are facing challenges. And if any of you are exporting and in the manufacturing sector, it would be good to get your views as well on this. Now, Chambers of Commerce do process export documentation. And again, that gives us a different view of international trade. And what we find is that the volume of documents that are processed by all chambers in the UK has actually gone down slightly since COVID. So we do have some challenges when it comes to international trade, particularly on goods exports. But service exports seem to be recovering and are doing okay. Now, here are some national data. So this is data from the Office for National Statistics. And I just wanted to present this for a broader context on what's happening in the economy. Now, I have a couple of charts on this. So on the left-hand side, we have the sectoral indices that the ONS publish on a monthly basis. So this is what comes with the monthly GDP release and some really interesting stats there. So what is the national performance? Let's look at services first. Now, services is by far the best performing sector group in the UK at the moment. And when we compare it to November 2024, so if we track that line to the starting point, so between November 2024 and November 2025, in that 13-month period, things have actually improved in the service sector. Things also seem to have improved in manufacturing, with a particular pickup in October and November. Right? And that is directly correlated with the improvement in automobile manufacturing and wider improvement in the manufacturing sector in October and November. Now, we don't see that in all parts of the Northwest, but nationally, this is what the data shows. We have an improvement in the manufacturing sector. We have an improvement in the services sector. In contrast, there is a reduction in performance in the construction sector. That's for 3 quarters now. So September, October, November. Between September and November, there has been a reduction, and also of slight concern for the ONS indices. The 100 mark is the threshold. So anything below 100 indicates a weakening, and the construction sector balance is now dipped to below 100. So it is at 99.8. Again, that is shown in the national data, but also the PMI data, QES data, which all shows that nationally and in the wider Northwest, the construction sector seems to be under some stress at the moment. One of the big contributors to service sector performance is retail sales. I mentioned retail sales at the beginning and how retail sales have not necessarily improved in the month of November, despite Black Friday discounting and reduction in prices and so on. And that is visible in the data. The black line there on the chart on the right tracks retail sales value. So this is the value, i.e. the price of goods overall. The green line is the volume of goods. And the one thing to note, of course, is that there have been significant increases in prices. Although headline inflation has eased a little bit, higher prices are now baked in. So we are paying a lot more, but consuming slightly lower volumes, right? Which is why that black line is significantly higher than the green line, because that's the value line. We're consuming less, which is represented by the volume line. Now, between September and November, there has been a reduction in both the volume of retail sales, but also the value of retail sales. The volume of retail sales is at 100.9. It is well above where it was in November 2024, and it was below 100. And that was the initial sort of the experiment that many retailers did with having Black Friday sales across the month of November. That happened in 2024, didn't necessarily happen in 2025. So over a 1-year period, things have definitely improved in both value and volume terms. But between September and November, there has been a reduction. And that, I think, is probably attributable to the reduction in consumer confidence. Now, right from the month of August, September 2025, there was that announcement from the Chancellor about tough measures. We have to fix the economy, black hole. And clearly, when there is that type of messaging coming from government, people and businesses will sort of tighten their belts. They will spend less, as clearly visible in the retail sales data, which has gone down. So that's retail sales. And then here is another interesting chart. And for me, this is actually quite striking. So this is, again, from the ONS, monthly GDP data, but this is broken down by different service subsectors. Right? Now, the reason I'm presenting this chart is to illustrate one important point. Now, if you look at the lines, the green line at the top, that is human health activities or health and social care sector, what ONS calls human health activities. Now, by far within services, it's health and social care that is the best performing, right? And then there is the second line, which is that sort of orangish line, which is information and communication. That's IT, digital and technology, generally a good performing sector. But then also note the third line from the top, which is that pink line. That's public administration and defense. And here's the important point. The green line representing health and social care and that public sector line, which is that pink line, are both directly attributable to public spending. So, in other words, the service sector growth that we are experiencing in the UK economy now is largely attributable to public spending. We are not seeing a huge amount of business investment. We are not necessarily seeing a huge amount of consumer spending as well. Now, do we have evidence for that? Yes, we do. So if you look at the bottom two lines, the dark gray line, which is accommodation and food services, or spending in hospitality, leisure, etc., that's actually pretty much where it was in November 2024. Things have not really improved. And retail sales is the blue line at the very bottom. So by far, within the services sector group, the two least performing subsectors are accommodation and food services and wholesale and retail trade. So the B2C side of the economy is actually a bit weak at the moment. Again, because of low levels of consumer spending, to which the budget and the uncertainty around the budget are contributed. Low levels of consumer confidence resulting in low levels of consumer spending. The B2B sectors are definitely better. So the purple line bang in the middle is professional, scientific, and technical activities. That's the ONS category, which stands for a combination of legal services, accounting services, engineering services, architectures, life sciences, and so on. So that's the sector. That's predominantly B2B. There could be an element of public spending as well on R&D through the universities and so on. But that's doing okay. Information and communication, the digital and technology sector. So the B2B side is okay. The B2C side is weak, but by far the maximum contribution to service sector growth is coming from public sector spending. And that is a cause of concern, because if we find that the chancellor has to deal with a deficit, if we find that the chancellor has to rein in spending at some point of time, then there could be a downturn in the economy as a result of a reduction in public spending. So there's a huge amount of reliance on that at the moment. Right. And then we come to recruitment activities. So two measures here. So workforce additions in the previous quarter, so the quarter 3 of 2025. Sorry, there is a slight error. It should say 2025 in the chart on the left-hand side. And then workforce increases, so looking forward, a forward-looking measure for the first quarter of 2026. And what we see is sort of a general stability towards the second half of 2025. On both the workforce increases, there is an improvement with some businesses saying that they might actually recruit staff in this quarter, in Q1 2026. But overall, compared to the starting point for those charts, which is Q4 2024, there has been a reduction for all sectors. There is a reduction in construction, there is a reduction in services, and there is also a reduction in manufacturing. That, again, should come as no surprise to us, because we have seen demand levels fairly stable, not increasing significantly. We have low levels of business confidence and consumer spending. So the intention to recruit is not as high as it was before. All right. So I mentioned business confidence. Here is some information on business confidence. Now, this chart for me is counterintuitive. What we saw early on in terms of demand and also the broader sector performance is that construction was actually the weakest of the three sector groups. But when it comes to business confidence, it's construction that seems to be doing well at the moment, right? So there might be an expectation that a pipeline of work will emerge in this year. And that must be the primary contributor. Again, very keen to hear from construction sector businesses amongst you. Service sector confidence is high. Manufacturing sector confidence has gone down slightly when it comes to turnover. But when it comes to profitability, there is an interesting picture here, because manufacturing sector confidence, the optimism amongst manufacturing businesses that they can maintain their margins or profitability, has actually improved into the end of the year. So it is now back to where it was at the end of 2024. That's that green line at the bottom on the chart on the right. That's profitability confidence for the manufacturing sector. Service sector confident, again, profitability optimism has improved in the third and the fourth quarters of 2025. So again, it is better than where it was towards the end of 2024. And then construction, the optimism amongst construction sector businesses that they can maintain their turnover and that they can maintain their margins seems to have gone up towards the end of 2025. So that again is good news. If business confidence picks up, then we might see business investment. We might also see recruitment go up in this year. Right. And finally, on business concerns and price pressures. Now, price pressures have been a significant concern. The retail sales data give us a different perspective on price expectations, the fact that prices have gone up. Now, this is a QES question, which asks whether you are intending to put prices up further. And when it comes to that measure about expectations that prices will go up, we have seen businesses in all three sectors reporting so. So businesses in the construction sector expect that the prices will go up. Similar situation in manufacturing. Now, one of the reasons for that is because of the higher cost of raw materials, especially imported goods. They have gone up in price significantly in 2025. And so there is that issue of raw materials. But we have also seen significant wage increases, forced, mandated wage increases as a result of the increase in national living wage and national minimum wage. But at the same time, wage pressures for businesses have gone up because of the increase in national insurance contributions for businesses. That began in April 2025. So those issues mean pressure on margins, higher cost of doing business, and the only way in which that can be managed is by putting prices up. And that's why we have seen over the second half of 2025, expectations that prices will go up actually go up slightly as well. Okay. And then looking into the concerns for businesses, the number one concern seems to be pay settlements. So wage pressures on businesses in Q3 2025, in Q4 2025, again, it's very similar. Inflation is also a concern. So it's wage rises, pay settlements, and inflation, which are the two most important issues of concern for businesses. There are concerns around raw materials. We know that interest rates might, again, those concerns should have eased, but actually they seem to be fairly stable. And again, I think there is a slight disconnect between the rates at which businesses and individuals can borrow and the headline Bank of England rate, which might also be affecting expectations that interest rates are actually going to be a concern. Because if the cost of raising finance is higher, then the outlook for business investment is not so great. I also have some free text comments. So this is one of the questions in the QES where we ask businesses to give their comments. There are concerns around the increase in employment costs and businesses saying that they may not necessarily look at recruitment. Some concerns about the government and decision-making, about there not being any measures to stimulate growth through investment. But there are also some other issues around planning permission for new space and new developments. Again, that's an interesting comment. We have seen that come up a couple of times about planning permission and issues around, obtaining permission, delays in permissions, etc., which might be affecting output in the construction sector. So there are some concerns like that as well. And then finally, this is sort of a forecast and a summary. So in terms of the outlook for 2025, the UK economy is expected to grow. We will find out in the month of February the actual growth figures, but our expectation is that growth will be between 1.2 and 1.4% in 2025, and a very similar percentage of growth in 2026 as well. So we are going to be tumbling along. We are not going to as it stands, not see huge amounts of economic growth. So growth may not double to 2% or 2.5%. It might stay around that 1 to 1.5% for now. There are concerns around business investment, and again, which is forecast to grow only marginally in 2026. We have some ongoing challenges in international trade. We know that nationally unemployment has crept up, and this is one of the issues that government want to address. They've set targets for employment as well. But then one big opportunity for the UK is on productivity. Technology adoption, better business investment, better investment in skills and training. All of these can unlock productivity. And once we see a significant improvement in productivity, we might also see a huge amount of economic growth. And another big opportunity is probably easing inflation and the cuts in interest rates. Okay. So we have some opportunities as well. There is an industrial strategy that the government is trying to implement. They have announced investment in rail projects and things like that. So again, pending infrastructure projects, if those investments come to pass, then again, we might also see growth in the Northwest economy. So I want to end there. If you have any questions, I will try to answer them. But if not, I'll hand over back to Dom now. Thanks, Dom.
Perfect. Thank you very much, Subrah. As always, a fantastic oversight of the data. If you do have any questions from the attendees, if you don't mind buzzing them onto the chat or the Q&A, and we'll pick them up before we finish the call today. We haven't got any so far, so I'll just give it a minute or so. Looking ahead to the next quarter, Subrah, what should local businesses be paying closest attention to based on what the QES is telling us now?
Yeah, Dom, I would go back to the point that I made about productivity. Investment in training and skills is probably one of the most important requirements at this stage. Many businesses may be looking at available technology, so they may be thinking about AI. They might be thinking about other ways of adopting digital technologies, automation in manufacturing processes. All of those are great, but I think those investments need to be accompanied by investment in skills so that people are actually better able to use the technology and make the best out of it. And so for me, any investment in technology should be accompanied by investment in skills, which is why I harp on the skills point. Investment in skills can actually lead to improvements in productivity. So encourage businesses to actually consider that as a serious issue. And the second thing is probably to look at what managing costs. I don't need to tell businesses about that, but again, that is one of the issues because we have higher prices. Headline inflation rate has actually eased, but that does not mean prices are going to come down. Right? Prices are staying high. So, kind of effective cost management so that they can then unlock investment is probably another thing that businesses could be thinking about.
Perfect. Thank you very much. And then just one more. A manufacturer on the TV news last night suggested that US tariffs uncertainty meant that they were pulling out of the US market. Is there a similar trend in the North emerging?
It's perhaps too early to say. The US is the single most important trade partner when you look at the UK's international trade partners country by country. Okay, if we look at it as a bloc, then the EU is the single largest trade partner. But for many regions in the UK, the US is probably the biggest trade partner, both in terms of exports, and we actually have some parts of the UK actually have a trade surplus when it comes to exporting to the US. Okay. So it's a significant market. It's a market with 345 million people. So, the big businesses who are already invested and committed to the US market may not necessarily pull back immediately. But what might get affected is interest in the US. So, smaller businesses which are trying to start exporting to the US, they will probably be put off by uncertainty around the tariffs and, sort of the general policy flip-flops that's coming from the Trump administration. tariffs, no tariffs. Okay, I've signed a deal with the UK, but suddenly there are some other geopolitical issues, which again is prompting tariffs. So essentially, tariffs have been weaponized. So it will cause uncertainty. For many businesses, it will be a cause of concern. But the US remains a significant market, and so it is actually quite difficult to pull back from such a large trading partner.
Perfect. Thank you very much. I believe that is everything. So once again, thank you very much, Subrah, for taking your time today and going over this data. Just for everyone on the call, the next quarterly economic survey will be released the 9th of February. So it's quickly coming around the door, which is a scary one starting the year. But we will then be covering this data, the quarter one QES data at the quarter one local and economic update on the 21st of April. As I mentioned at the start of the call, the more data that we can get, or sorry, the more responses that we can get for the surveys, the more accurate data that we can, or Subrah can then provide with yourselves going into this next session. So of course, these emails will come out to all membership as we go through the coming weeks. Thank you all once again. Thank you very much, Subrah, and I hope you all have a fantastic